Hey everyone. So in the last video, we get to know that there are different type of equity mutual fund. And in case of equity mutual fund house invest in different companies share. Same way, there is another type of mutual fund, which is called debt mutual fund. And in case of debt mutual fund house invest in different bond. And that bond can be corporate bond, uh, government bond, treasury bills, or any other money market instrument. In case of equity mutual fund, they generate income from the dividend payout by the company, as well the market price of the company. In case of debt mutual fund, they generate income from the market fluctuation of the bond price, also the coupon rate. So in case of bond, there is always be a coupon rate, a fixed coupon rate. And there is a similarity between fixed deposit and the bond. What are the similarity? One is fixed deposit has a fixed interest rate, as well bond also has a fixed interest rate. In case of fixed deposit, there is a maturity period. In case of bond, there is also a maturity period. But there is a difference. The difference is fixed deposit cannot be traded in share market. But in case of bond, it can be traded in share market. So based on the maturity period and type of bond, there are different type of mutual fund. And that we will discuss in next video. But today we will discuss reason behind the fluctuation of the bond price. So now we will discuss why bond price fluctuate, right? So the point is that bond prices are inversely proportional to the interest rate of secure investment. So bond price is inversely proportional to the interest rate of secure investment, like FD. So let's say the current FD rate is 5%. Okay. Now, Mr. A buy a bond at rupees 1,000, right? And interest rate of that bond will be around 7 or 8%. Why interest rate will be more than FD? Because we are like us. So investor like us, they don't prefer corporate bonds or any other government bonds. They prefer FD, right? If we get more interest, then only we can think of corporate bonds or other government bonds. So each bond have the interest rate which is more than FD. So let's say that this bond price is 1,000 and the interest rate is 8%. Now, after 2 years, let's say FD interest rate increased and it becomes 7%. Let's suppose that interest rate becomes 7%. And now the new bond price, which is issued at 1,000, now the interest rate won't be 8%, it will be more than 7%. That will be around 9% to 10%. Because it should be more than secure investment, interest rate of secure investment like FD, right? So FD rate is 7%, interest rate is 10%. Now, Mr. A want to sell his bond because bond can be traded in share market, right? Now, Mr. A want to sell his bond, but his bond are giving interest at 8%. Why someone will buy his bond? Because now new bond are giving 10%. His bond, no one will buy his bond, which is giving 8%, right? So if he want to sell his bond, he need to sell his bond at lower price. So let's say it will be 800. Now someone from the market, they can think of buying his bond, right? In the same way, let's say the interest rate after 2 years become 3%. Now the new bond will not give him 10%, it will give him 5 to 6%, right? Now new bond is giving 6% interest. Now let's say Mr. B want to buy a bond. He will see that there is a bond of same 1,000 rupees and it is giving 8%, right? And Mr. A want to sell, but do Mr. A will sell his bond at the same price that he bought? No, he will increase the bond price, because if someone will buy his bond, that person will get 8% interest rate, because the interest rate, once it is fixed, it cannot be changed, right? So now Mr. A will sell his bond at 12,000 rupees, 1,200 rupees with interest rate of 8%. So you can see that when FD interest rate get increased, bond price should get decreased. In case of FD interest rate decrease, bond price will increase. So that's it from this video. In a later video, we will discuss about like what are the different type of debt mutual fund. And also we will discuss about the tax implication for debt mutual fund. Also, we will see that whether should I invest in debt mutual fund or not. So for that, you need to like the video, subscribe to the channel, and press the bell icon so that in the next video, whenever I will upload a next video, you will get a notification. Thank you.